For free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
As we kick off our show on Wednesday today, in the middle of another busy week of data, including this morning, we got producer price index data, we got retail sales data, New York Empire State Manufacturing Index data. We've got all kinds of energy data coming out at 10:30 this morning. I mean, it's just, a packed schedule here that we're going to get through. But I think, Paul, and it's Chuck and Paul and Tucker with you, and I think, Paul, when we start to kick things off today, there's a piece from the Wall Street Journal that I'm not surprised that the headline is here and that this is what's being talked about, because the headline is, "The elusive soft landing is coming into view." And my view, Paul, is that if the economy were to simply freeze at this point in time and continue at, the pace it's at in November right now, kind of October, November of 2023, if it did that for a year, you absolutely have a soft landing. The question is, can the economy do that for a year, or do we see a greater slowdown at this point that points us towards a recession that may or may not be particularly steep?
It's a logical question to ask, Chuck, and it was the first thing that came to mind when I saw the inflation report data come out yesterday, where it was really across the board. There's not too much negative that you can point to in that report, a really strong report, and immediately I thought of that phrase, soft landing, that comes to mind, that has the Fed, that along with the supply chains from COVID sort of unsnarling, perhaps gotten us to a point where we're going to get out of this unscathed. Certainly, as you point out, there is many quarters of data to go. This is just a snapshot at a point in time. At the moment, we have a lot of indicators out there that the economy is in a very good place. It's been incredibly resilient this year. Inflation has come much more under control at 3.2% as of yesterday's report. Some of the core inflation data looks strong as well. So all that considered, very good position. But to your point, we have to see what 2024 will look like from an economic progress standpoint before we start waving the victory flag here on our battle with inflation.
And I also always like to make the point that just before every recession, it always looks like a soft landing. Because when you go from really hot of a boom cycle into the really cold of a bust cycle, well, there's always that piece in the middle where you're like, oh, this is great. Maybe we'll just hang out here. And I'm not saying that a recession is definite, because I don't know. I do not have any kind of clear recession call at this point. So in full disclosure, I don't know, and I'm fine saying that. But there's always a point heading into recession where it looks like you're getting the soft landing. And you don't really know if you are until after the fact, because the one thing that I will say is that even though some recessions can be more mild than others, from an employment perspective, that's not really ever the case. Like you never have a recession where unemployment goes up 0.5% and then just chills out.
Mm-hmm.
It's usually, hey, once you get to like 1% up in unemployment, you're usually, not usually, in every recession in the 20th century and the ones thus far in the 21st, unemployment ends up going, usually 2 to 4%, sometimes a little higher than that in terms of how much it rises from the bottom. So I think as I look at where we sit right now, I'm not surprised that you have soft landing being talked about, because that's what the market's pricing in again.
Mm-hmm.
You got the S&P 500 back above 4,500 right now. You got the 10-year U.S. Treasury back at 4.5% after being at 5, almost 5. That's pricing, pretty soft landing-ish right now, and maybe it happens. Maybe it doesn't. The one thing I think you can say, at least, is that the stock and bond markets are fairly aligned at this point. They're saying, hey, we think we're going to get out of this, and we're, you might have a chance of some cuts next year, but we're in a pretty good spot. I don't think markets are saying different messages like they were for much of this year, where the bond market was screaming recession and equities were like, no, we're good.
No,
and stocks turned out to be right.
Yesterday's market moves were really reflective of that, where you had the U.S. 10-year Treasury drop 20 basis points in and around that level, and then you had the small cap index, the Russell 2000, which are businesses that are more economically sensitive to recessions and inflation and interest rate impact. That soared, I believe, upwards of almost 4%, Chuck, yesterday. So
close to 5.
Right. So seeing those numbers yesterday, you're seeing them, as you mentioned, moving in tandem, some economically sensitive areas of the market really upticking significantly with that encouraging inflation report that we saw there. It was certainly welcome good news. We'll take it, right?
It was. I mean, if you're going to make the case that inflation is going to worsen over the next 6 months, the question that I think I would ask is, okay, how do you get there? Because with the inflationary cycle that we just saw, it was really threefold, actually. The first was you had a whole bunch of businesses that shut down in 2020.
Mm-hmm.
And supply chains were just a mess after that. So that's part one, is you had supply that was limited. Part two, hey, you know what we're going to do? We're going to give everyone a bunch of money while they can't really do anything, so that as soon as they can, spending. So you decrease supply and increase demand. Kind of bad just to begin with. And then Russia's like, hey, by the way, Ukraine, we're going in. And that obviously caused some major commodity problems that exacerbated things last year as well. So it was this perfect storm that led to all of this. If you're going to make the case for a rebound in inflation in the next 6 months as like a primary concern, what's the mechanism for it? Because here's where I stand, Paul.
Mm-hmm.
U.S. deficit went up meaningfully this year. Next year, it's going to be a touch smaller according to projections. So you say, okay, it's not going to be deficit-related in terms of, the deficit's still big, but it's all relative to where it was. There's still going to be less spending than there was this year. So it's not coming from there. Supply chain issues, we can see a redux of that?
Unlikely.
Why now? Why would it rear its head at this point? Demand side of things, wages are cooling. You're not seeing it there. So absent some kind of unexpected geopolitical shock, it's kind of tough for me to say that the inflationary picture is going to worsen in the next 6 months.
To me, if I wanted to play devil's advocate, that's the avenue I would go down, is the geopolitical shock or the commodity aspect of things, energy specifically. But it's a weak case that I'd be making if that was going to be the way to argue that point, to see inflation tick back to the levels that we saw, 9.1% last year. We all agree it's not going to go back to that level, but even if it meaningfully went back to 4 or 5%, it's hard to determine what the case could be. Shelter, that's a big component of things. I just can't think of a story in my head that would really align to shelter putting upward pressure on inflation going forward with rates at this level. To me, it's hard to make that argument, hard to make that case.
Now, this isn't to say that inflation is vanquished forever. I'm not making that case. But at this point in the cycle, it's not the biggest threat here. If we get the actual soft landing over the next 6 to 9 months, and then you start to see demand reaccelerate and things like that, then you might say, hey, now over the latter part of 2024 into 25, maybe inflation does become the bigger risk again then.
Mm-hmm.
It's a dynamic system. So I'm not saying we've beaten inflation. I'm saying for the next 6 months, it's not the main thing you have to worry about.
A huge change from what the last year and a half of these shows have been about, right? That's been our end-all, be-all every single day.
So, with that in mind, let's take a quick break. But then I want to get to this piece that I think does get at the crux of why Americans think the economy still sucks.
Yep.
And I think it's a pretty simple case, actually. And so let's take a quick break, and then when we come back, we'll discuss this Wall Street Journal piece, why all inflation feels bad, but housing inflation is the worst. We'll talk about that when we return.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall's in full swing, the cold weather's coming, and now's the perfect time to get a head start on your next vacation. The U.S. Virgin Islands have been named one of the top Caribbean destinations so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today.
That's visit usvi.com.
Paul, I want to talk about this piece from the Wall Street Journal. It's titled, "While All Inflation is Bad, Housing Inflation is the Worst." And I think this kind of gets at why Americans feel so bad about the economy because, as we've talked about, unemployment's really low.
Mm-hmm.
The rate of inflation has slowed dramatically. But when you look at the stuff that I think Americans really judge the economy on, and like upward mobility in the economy specifically,
mm-hmm.
if you want to buy a house right now, the prices are actually pretty much back at the peak they were at last year. And interest rates are in the mid-7s, and we're almost 8.
Nice.
And so just the trying to actually buy a home, if you're not downsizing from a home that you already have a ton of equity in, it's borderline impossible for most families.
It really is.
So if you're great in the economy, you're like, okay, great, I'm stuck here. Like you feel like you're stuck in place. On top of that, new car prices, while they're down slightly from last year, according to Kelley Blue Book, the average American new car buyer paid $47,936 in October. It's down from about $48,000 and change last year, but it's, again, you're like, okay, so I've got to pay that price. Plus, if you looked at what you can do for interest rates on cars now, if your credit's not good, you're paying double digits most of the time.
Incredible.
So those two big-ticket items that typically feel kind of upwardly mobile in American society, you can't do it.
We had a conversation a week or so ago, Chuck, regarding the misery index, which speaks to some of the subjects that you were mentioning here. And it's continued to really rattle around in my mind that when I talk with clients, when you meet with them, there is that sentiment out there that inflation is still, while we were just quoting data from the most recent report that was some really strong numbers, it's still being felt psychologically by all of the consumers out there for those reasons, because we are not like these economic reports, the general family out there, where we're saying, oh, gee, it's 3%. Yes, it's 3% from last year. All these reports are looking at prior year data. But what this article in the Wall Street Journal does a great job of is showing the compressed amount of inflation that we felt in a very short period of time, where, to your point, home prices have risen by 30% over a 3-year period if we go from January 21 to what they'll be in and around January of 24. At the same time, to your point, mortgage rates have tripled over that point in time. Then you also have gas and food, which are up 20% and 40% from January of 21. It's just been a lot to digest in a very compressed period of time for an economy that hadn't seen inflation in years. If we can get to a level where it flattens out 3 years from now or 2 years from now, when we talk with clients about their grocery store runs or what they're paying for a new car, if it levels off, there'll be less of this shock because people will just adapt and get used to it. But I don't think people have gotten used to it just yet. It's still shocking when you're doing these expense runs or looking for a home, how much it costs today.
Which brings me to my conclusion on all of this. If you want Americans to feel better about inflation right now, there are 3 levers that you need to try to influence. The first, it's not bringing down the overall price of housing, because it is what it, like, yeah, I'd love to see us just build more housing and get rid of, a whole bunch of zoning laws and just throw a bunch of housing at the problem. I'm also realistic.
Mm-hmm.
I think if mortgage rates come back down into the 6s from the 7s and 8s, I think people start to say, hey, this isn't so bad. Not because they love rates in the 6, but again, it's all relative. On the way up, gas at $3.30 a gallon, we were like, oh, this is getting high. But when you're coming down from $5 a gallon, you're like, yeah, $3.30 a gallon's pretty good.
Exactly.
Same on rates. You get mortgage rates back into the 6s, okay, this is pretty good. We can figure this out. Next piece, autos. Get those prices down. Like, UAW strikes over, start producing more. We're seeing, again, new car prices are coming down a little bit. You get auto interest rates down and new prices continue coming down because of more competition on the EV space and stuff like that.
Mm-hmm.
Okay, you got something. Last piece, obvious, gas prices. Get those coming down. You get those 3 things coming down, and you start saying, hey, this is pretty good, actually. I think those 3 are the things that influence sentiment the most about the economy, all else being equal, like given equal rates of inflation and unemployment.
Yeah, the housing one we know just can't be touched, particularly in a short time span, but those other ones are more likely to be influenced over a shorter period
Groceries,
of time. They're
too.
more
You can
volatile.
throw groceries in there if you want.
Right.
On the housing side of things, major positive development in the greater Boston area. Brookline Town meeting yesterday. Paul, did you go?
No, I didn't.
No, you don't live in Brookline, so you can't go.
I didn't make it.
I don't either. But Brookline Town meeting members late Tuesday voted for a rezoning plan that they are calling a generational change. It passed 207 to 33 with 7 abstentions, and it allows for the town's commercial districts to build significantly more multifamily housing, apartments, and condos near the public transit stops. This is huge in terms of potentially being able to get a lot of inventory into a very desirable area in a small geographic footprint.
It's amazing, some of these numbers, Chuck, on the values of homes in Brookline. Obviously, you know it's a very desirable community, but the Warren Group had done some research where the median home price for a single-family home in Brookline stood at $2.5 million, for a condo, $927,000. Because it's been so difficult to develop in Brookline over the last 50 years, you've seen those prices continue to rise because there's just limited inventory out there. This proposed change, they have estimated that could perhaps add 1540 units of new housing to the area. It's a welcome development to find some additional inventory out there. That's how you're able to bring down prices in the area, if you can get more options on the market. So tremendous to hear this. We had a big loss with Braintree in the South Shore Plaza, that whole dispute, but it's nice to see some rezoning actually occur in the greater Boston area here.
And what this is talking about, it's not saying, hey, you're going to have, giant 16-story towers going up everywhere. No, what it's talking about is, hey, we want to allow 4-story buildings with apartments and condos in Brookline Village, Coolidge Corner, and JFK Crossing. So it's again, this is what I talk about when I always say, hey, look, there's a way to make multifamily fit the locations it's in. If you've ever been to Coolidge Corner, this is the exact type of stuff you should be doing there.
Certainly.
Like this is right in the wheelhouse of being able to add inventory while maintaining a neighborhood's feel. So I think this is just fantastic. And this is the kind of stuff that I want to see. I don't want to see Brookline, throwing up, 40-story towers, because that's not the community. I get that. But yeah, 4 stories, you got, ground level retail and then 3 stories of apartments and condos above. Man, that's perfect for these neighborhoods.
And really desirable. Like I said, you'll get the appetite for it because of the commuter access that you have, very close to the city, a great community to live in. So from a development standpoint, they're going to be encouraged to build those units as well. When it gets rezoned, you'd likely see some entrance into the market.
The estimate, by the way, is that this will produce up to 1,540 new units of housing in a town that currently has a population of 63,000. So, again, you figure, hey, 2 to 3 people per unit, you're talking about potentially increasing the capacity of the town by about 10% through housing that's also right near mass transit. Let's take a quick break here. When we come back, we've got Wall Street Watch, and then we're joined by Todd Lutsky for Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Susan and Mike from the Armstrong Advisory Group, and this month we're talking about our free guide, the top year-end financial tips. Mike, the holidays are coming, and that brings with it the desire to gift to your family. What are the rules around the annual gifting limits?
Well, you, Susan, owe me a gift every single year, as we know, but I don't think that's what we're actually talking about. What the rules state is that you're able to make gifts in 2023 up to $17,000 without triggering any sort of reporting or paperwork requirements to the IRS. If you go above that $17,000 exemption amount per person, then you do have to file a gift tax return, but it doesn't necessarily mean that there will be any taxes owed. That's where a tax professional really comes into play here to make sure you understand what the ramifications of that are. But gifts to 529 plans, for instance, if you're looking to fund a specific goal, are very common this time of year.
So if someone's thinking about gifting away as a strategy to reduce their taxable estate, Mike, how do they go about that if they want to give away much more than the $17,000? That's the freebie, if you will.
Honestly, more than we can get to in a quick discussion, but you need to talk to a couple of planners here to make sure you understand the tax ramifications and understand the current limits, because states like Massachusetts just completely redid their estate tax, so there's new things to know about that type of strategy.
Folks, we have information about gifting as well as much more in our brand new guide, The Top Year-End Financial Tips. You can get your copy today by calling 800-393-4001. That's 800-393-4001, or request one online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are extending their gains from yesterday's huge rally, which was driven by encouraging inflation data. This morning, traders are now reacting to better than expected data on the retail sales and producer price index front. Right now, the Dow up by over 1/3%, S&P 500 up nearly 0.5%, and the Nasdaq also up nearly 0.5%. Russell 2000 continuing its rally, up 1.33% today after its huge rally yesterday, and the 10-year Treasury yield up by 9 basis points, now at 4.53%. Crude oil off by over 1.33%, trading at $77.18 a barrel. Target shares are surging 17% after smashing third quarter earnings expectations while also beating revenue forecasts, as purchases in everyday items like groceries helped prop up weaker customer spending. Meanwhile, shares in Advance Auto Parts are up 2%, despite the car parts retailer posting a third quarter earnings per share loss of 82 cents and also lowered its earnings per share guidance for the year to $1.40 to $1.80 per share from $4.50 to $5.10 per share. And CNBC is reporting that Citigroup will begin layoffs under CEO Jane Fraser's corporate overhaul. Employees affected by the cuts will be informed starting Wednesday, with new dismissals announced daily through early next week, according to people familiar with the matter. That stock is up by 1.5%. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And we are now joined by Mr. Todd Lutsky from the law firm of Cushing & Dolan. We call the segment Ask Todd because, hey, it's your chance to actually talk to Todd and ask him your questions about your estate plan. The studio line here, the number is 888-205-2263. So get dialing if you have a question that you'd like to ask Mr. Lutsky. That number again is 888-205-2263 to be able to ask Todd your questions live on the air right here. I'll get started with the first question. Mr. Lutsky, how are you?
I am doing well, and you?
I'm doing pretty well. I figured out my wife's birthday gift yesterday.
Oh, you did? You getting her something good?
I am. I'm buying her. She has an abacus, and I'm buying her some beads for it because I always figured it's the little things that count.
That is true.
So that's the direction I went in on this one. Todd, I want to talk a little bit about the current state of the national estate tax and gifting exemptions.
Yes.
What's the level that those are at for 2023 and what they're expected to do next year?
So the current present interest the present interest exclusion amount for gifting, right, is currently at $17,000 per year per person.
Okay.
And that is going to go up to $18,000 per year per person, which is kind of exciting, folks, because if you remember over the long haul that it started out way back when I was practicing in the beginning at $10,000. And that's what most people always, even oftentimes, still remember it being. Not realizing that at some point it got indexed for inflation, and it takes a while. It does not go up every year. This is why it's exciting for us tax people, because it has to bump up through this index enough to move it an entire thousand. They're not going to move it from 17,000 to 17,200. They're never going to do that.
Sure.
It has to jump to a whole thousand. So it did. So that's good news. It's up to 18,000 per year per person. On the federal estate tax side of the equation, that also has been indexed for inflation, and it is, I believe, $13,610,000. I think that's the exact number. I just got to double check it. I'm pretty sure $13,610,000 from $12,920,000, which is what it is today. So that's a good jump as well, a significant jump.
And that bump in the federal estate tax limit, that was put forward in the Tax Cuts and Jobs Act back in 2017. When does that sunset at this point?
Yeah, and that's a great point. So we need to remember that, and that's why folks with a lot of planning need to keep, with a large estate, need to keep this in mind because it's critical. And I can't tell you, by the way, how many clients come in, or potential future clients come in that either have an estate plan in place or don't, and they tell me that if they have an estate plan in place, that their lawyer never mentioned doing anything else, even though they've done basic planning. They never called them. They never mentioned it. Well, folks, I'm mentioning it for everybody in the legal profession. If you're worth somewhere around $13 million in total, not maybe 13, let's go to like 15 or up, you ought to think about future gifting, future ideas of how we can use this exemption, because the exemption is moving, as I said, to $13,610,000, but come January 1, 2026, you're right, the 2017 Jobs Act sunsets and brings the exemption back down to $5,490,000, which is the 2017 level that it was. However, it too is indexed for inflation. So we don't know exactly what that number is going to be. We are guesstimating it to be about $6.5 to $7 million, somewhere in that range. So if I'm married and I can shelter 7 times 2 is $14 million, maybe I'm okay. But if I got a $20 plus million estate, how can I use those exemptions now before I lose them in 2026? And that's what your estate planning attorney should be talking to you about.
Talking with Todd Lutsky about estate planning here, and the segment's called Ask Todd so that you can ask him your questions. The studio line here is 888-205-2263. Again, that number is 888-205-2263. We're going to take a quick break now, but when we come back, it's right to your questions about your estate plans. Get calling. That number again is 888-205-2263. One more time, 888-205-2263. Quick break. Your calls after this.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visit usvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Securing your family's financial future is one of the most important elements of estate planning. Leaving assets to your children can be very beneficial. However, gifting these assets can pose major problems. If you gift your home to your kids and they suddenly decide to sell it, your gift could create massive capital gains tax problems. Cushing & Dolan are experts in elder law. Let them help with your legacy planning by calling 866-848-5699. Ask for their new guide called Making the Most of Gifting Assets. Whether you're deep into the planning process or just starting out, this guide contains the information you'll need to make the right decisions for your overall plan. Call today, 866-848-5699, and get this new guide, Making the Most of Gifting Assets. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Let's get straight to the callers with Todd Lutsky. First up, we got Jimmy in Provincetown. Jimmy, you are on with Todd Lutsky.
Hi, Todd.
Hello.
Can you hear me all right?
I can. How can I help?
Okay. The question is, you did an irrevocable trust for my mother, Frances. We had two properties, one in Worcester, one in Provincetown.
Mm-hmm.
My mom passed away in 2016, and as we settled the estate, one of your associates wrote up a new trust for the beneficiary. Now, I have the paperwork that describes the trust, and it has our names and our signatures on it, but I never filed a new deed, and I'm wondering if I should file a new deed with those terms of the new trust.
Well, when you mention a new trust, again, I don't have this trust in front of me now to read what your mom's wishes were, because she would have had language in the trust that says what to do with these two properties upon her passing. It would say upon her death, the property goes either divided amongst the kids equally or something to that effect. And then it's going to say whether the property gets paid out to the children or grandchildren or whether it's held in trust. And so if it's held in trust, then it just stays in that trust that's already there. So you don't have to deed anything anywhere else. It stays in there. It's not like you took it out and then did your own plan. In other words, if the property was deeded out of the mom trust to Jim, and then Jim, you came in and did your own estate plan, well then, yeah, there would be a deed out and a deed from you into your new trust. But if it's just being held in mom's trust, even after she's gone, because remember, trusts don't die when people die. They can live on. And that's really one of the big benefits of doing estate planning. So do you remember if your mom's trust paid out, or is it held in trust for you kids?
I think we established a new simple trust
Not
in
we,
2017.
you. In other words,
Yeah.
did it go equally to the kids? So if you...
It went in different portions, and I'm a trustee, and my sister would be the next trustee.
Okay,
So
I think in all fairness, you need to call me off air on this so I can look at the document, because I think we're saying two different things. Either the document ended, your mom's document ended and said, here, kids, take the property and then go do your own plan, or it said, hold it in trust for my kids. And then you could be the successor trustee, Jim. You could be a trustee with your sister. That's all possible, but you'd be trustee of that trust. So I think... give me a call. It's going to make a big difference. So give me a ring off air on that, and I will look up the document itself and tell you which way to go, whether you needed another deed or not, because I sense that you might not. So, but you know what, folks? That's really a great question, because these trusts do work and they do live on for people. So it's important to understand how they do it, because then if it doesn't go to these kids, they might not have to re-gift the asset or build up their own estate. It might be available to Jim, but not owned by Jim. And therefore, it's not included in his estate. But folks, if you do have an estate and you're thinking about how to reduce your estate, like Chuck was asking, gifting is an idea. I mentioned it for higher net worth clients as well. But gifting, everybody thinks is an easy thing. That's simple. I just make a gift. It feels good. I don't have to do much. There's so much to think about when you're making a gift, folks. You got to figure out how it impacts your federal estate tax, how it may or may not impact your state estate tax. Are there any gift tax ramifications to the giver? Are there any income or gift tax ramifications to the recipient? Generally, no, but you got to look, right? And the type of asset I'm giving away is critical. Maybe I don't want to give away highly appreciated assets that create bigger tax liabilities to the beneficiaries than they would if I died owning them. Maybe I should do cash. Or maybe I should set up a trust to hold the assets for the benefit of my kids so they don't own it outright. Tons of benefits there. Folks, get the guide. Learn how to make the most out of gifting your assets, which is the name of the guide, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com to make the most of your Thanksgiving.
Let's get Eric in Eastham on the line. Eric, you are on with Todd Lutsky. What's your question?
Good morning. About the $17,000 gift.
Yes.
I'm the trustee of my father's house. He had passed away. Me and my brother are to split the house sales. So if the house goes for $150,000, or it's worth $300,000, my brother wants to buy me out of it. Can I just take $17,000 as a gift towards that, towards the house, and not claim that?
Well, so let's try to figure. I just got to ask you a couple more questions because I'm not really following everything. So one, there's a piece of property worth, say, $300,000. It's in your dad's trust currently? Yes.
Yes.
Okay. And your dad died, and when did he die?
Yes, April.
April of this year.
Yes.
Okay, so your dad passed away in April of this year, and he owned a property in a trust worth $300,000 that I assume the trust when he died was revocable?
I believe it was irrevocable. My brother still lives in the property.
But it was
waiting a year.
But it was irrevocable when he died. But he didn't give it away. Like I do irrevocable trusts that are still included in his estate when he dies. Right? It's still part of his. He didn't make a completed gift. Right?
No, he did not.
Okay, great. So here's what happens. When he passes away in April, the value, let's say, was $300,000. And this is exactly what I was just talking about a second ago. The basis in that property in your kid's hands is $300,000. Why? Because he died owning an asset that, while in a trust avoided probate, was still included in his estate for estate tax purposes. So, therefore, the value is stepped up. The basis is stepped up to fair market value. So, if you kids were to sell it for $300,000, you would have a basis of $300,000. And there would be zero income tax to pay. So that's how that works. Now, if you don't want the property, but you want $300,000, I guess he can give you, or you could give him your half. But I don't think you want to do that. You want the money, right?
Well, yeah. If he wants to stay in the property himself,
yep.
Can he gift me $17,000 as like a gift and not like towards the down payment of the $150,000?
Sure he can. $17,000. He could give you $17,000 as a down payment towards him buying out your half. Sure, and he can do that every year. And if he does it every year, it is a complete freebie, and that's going to be $18,000 next year. He doesn't have to file anything. He doesn't have to report anything. So, I hope that helps. Do we have one more caller still?
Well, Todd, we're a little bit up against it, so any other last items when it comes to gifting that you want to address in the next 30 seconds or so?
Yeah, I think just to finish up then with Eric is he can do that gifting, but remember, the good news is when he is buying out, it sounds like his brother is going to buy him out of that $150,000. So ultimately it's the brother, it's Eric rather, selling his half. The good news, just to make it clear for everybody, the good news is him selling his $150,000 portion will generate no capital gains tax for Eric. And that's the benefit of dying owning assets versus gifting.
Mr. Lutsky, thank you so much for the time today.
Always a pleasure.
The views expressed in this segment are solely those of Cushing and Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing and Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing and Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com.
Still a lot more to come in hour 2 of the Financial Exchange. We got retail sales data we got to walk through, as well as producer price index data. Target reported earnings after the bell yesterday, or rather before the bell today, I'm sorry. They're up about 18%, so we'll talk about what's driving them up so much. Then we've also got the much-anticipated Xi Jinping and Joe Biden meeting that is going to be happening this afternoon. We'll talk about expectations for that. And a little bit chatter about America and maybe how we can get our debt problem back under control a little bit. It's a little much. All right? It's a little much. We're going to take a quick break here, but hour 2 of the Financial Exchange is coming up in a little bit.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing and Dolan with a master's in taxation. And today we're talking about the implications of gifting your assets away. Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
Yeah, that's just one of the problems of giving away your house, but let's explore it. If you give your house to your child thinking, okay, that was easy, but now you don't own it. So now you really have no right to live there and, of course, no right to sell it. Right now, if you happen to have kids that are really nice and you ask their permission, which I don't ever want my clients to have to do, to say, please sell the house, you've also given them a huge tax liability because all the proceeds would go to them. Now, you don't have the money you need to buy your new house. And plus, if they don't live with you, then they don't get this capital gains exclusion that goes around along with selling your primary residence. So you're creating an adverse capital gains tax bill for them to pay. And then in addition to that, if they are nice, after they pay the tax, then they have to give you the money back, which could create a gift tax problem for them and impact their estate planning efforts. Finally, you get the money back, and then you can go ahead and buy another house. Folks, don't go through that. Set up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Kicking things off in the 11 o'clock hour, we've got the Dow Jones Industrial Average up 164 points, about 0.5%. S&P 500 up 21 points, about 0.5%. NASDAQ is up 74 points, about 0.5%. So we're pretty consistent there, which is nice to see. It's good to see everything moving along. We got the 10-year Treasury selling off a decent chunk today, actually, up 9 basis points, back up to 4.53 after a big move down yesterday. Remember, prior to yesterday, the 10-year was north of 4.6, actually. We closed on Friday, I believe, somewhere around 4.63. So even with this move back up, only retracing about half of yesterday's drop in yields just because it was such a significant move down there. We've also got oil on the move. It's down 99 cents a barrel to 77.27, so still hanging out in that mid to high 70s range. AAA national average for gas prices down another cent to $3.34 a gallon, so we're continuing to see gas prices falling with now only 9 days to go, actually 8 days to go until Thanksgiving, so that is surely welcome news for a lot of families who might be filling up on the road to some turkey in about a week or so. And then we've also got gold prices. They are up 60 cents an ounce to $19.67.10, holding pretty steady in that high 1900 range at the moment. Paul, we got retail sales data this morning. It came in with a decline of 0.1%. Expectations were for a decline of 0.1 to 0.3, but we also saw that the previous number was revised upward further to 0.9%, and so this decline is actually coming off a higher baseline. So overall continues to point towards U.S. consumers just spending a bunch of money on retail stuff, and the trend from the last couple months of increases may be plateauing now, but still not any kind of meaningful drop.
No, this report, I believe the estimates, Chuck, were for 0.3% on the this month. That's what they were anticipating, so slightly less than the decline that they had anticipated previously. But if you combine that with the increase for September, consumers still staying quite resilient in terms of some of the earnings reports that we've seen, and we'll cover one in just a moment with Target. But Target, Home Depot, other retailers out there indicating that consumers are peeling back. I do feel like that is just sort of lip service that most of these companies tend to provide when they do their earnings report to perhaps lower the bar for future quarters, but they are suggesting that these bigger ticket items consumers are holding back a bit, so perhaps we'll see a bit of a plateauing on future retail sales reports on the heels of that.
It seems to be a lot of housing related stuff that is slowing. Furniture and home furnishing stores down 2% according to this report for the month, now down almost 12% for the year. Building material and garden supply stores, Home Depot, down 1/3%, down 5.6% for the year. Again, those are the kinds of areas where you're seeing meaningful declines. When you look at, electronics up 0.6% for the month, food and beverage stores up 0.6% for the month, health and personal care stores up 1.1%, clothing was flat, sporting goods down 0.8%. I guess Patriots fans aren't buying jerseys anymore. It's been kind
Save
of
it for the new draft pick.
Yeah, you're kind of out on the those Mac Jones jerseys just might not be lasting as long as people.
Got to get
hoped.
rid of that inventory.
Markdowns are steep these days, and you've got non-store retailers, so online up 0.2% for the month, food service and drinking places up 0.3%. So it seems to me it's really the pullback on spending around housing, which makes sense because buying and renovating houses has gotten more expensive.
Certainly. The Home Depot, I believe it was the CEO, had mentioned in their earnings report that if consumers were previously inclined to do a renovation, now what they're doing is more just the bare minimum to sort of keep their place intact, maybe some painting and minor things rather than this big overhaul of doing a massive renovation. They've seen those big projects sort of tick down and just more of the smaller stuff being done. And that really jives well with the increase in interest rates. Typically, if you're doing a renovation, you might tap into a home equity line of credit. Those rates are to the point where you'd probably second guess doing that and maybe just go ahead and do just what you need to get by.
Let's talk a little bit about Target, if you want to, Paul. I'd love to.
Yes, what we saw here, Chuck, is they beat significantly on their earnings on the most recent quarter. The stock is really surging up significantly today. I believe it was up upwards of 15%.
17%.
The last time. It's 17% at the moment. Now, to be fair, the stock was down 26% going into today's trading, so that's still down significantly on the year. Some of the improvement that we saw out of Target from this quarter is their inventory levels, a better management of inventory. That was a huge issue. Pandemic and post-pandemic, having what they needed on site, that really led to a boost in profitability on the earnings per share metric. But again, Target sort of mentioning some of these other trends that Home Depot had mentioned too, that they perhaps see a slowing down. What really kept up the earnings for this prior quarter here was food and beauty items, some of these recurring purchases, and less the big ticket items that we were mentioning before.
Yeah, and as you noted, I think the story here is that Target was priced for a more severe downturn, and this gets at something we talk about a lot, which is the expectations game heading into earnings. The stock in particular, it was pretty much flat through May of this year, and then fell that 23-25% in the last 6 months. So it was kind of this bad news story over and over, and just showing a little stability here. Obviously, it speaks to the fact that the stock had sold off so significantly. So it certainly, again, if you look at comparable store sales, they were still down 4.9% compared to the prior year. So this is not hey, everything's all good, because remember, comparable store sales give you the number nominally. Inflation's been running 3 to 4% over the last year, so that means in real terms you're down like 8-9% in real terms.
Right.
Overall, I think this is something that companies are still trying to, figure out and work through in the retail space, which is how do we get people buying our stuff during a time period where their budgets are now stretched. And it might just be, as Target's talked about, getting slimmer on the inventory and really not carrying as much there. And that's how you can improve profitability, even if the overall sales picture is still not great.
It'll be interesting to see what we get out of the holiday season spend here. It's supposed to be much more mellow than some of the prior years that we've seen, so it'll be interesting to see Target and other retailers out there how they fare for this holiday season coming up over the next couple weeks here.
What are you buying for Christmas?
Oh, geez. Spa gift card for the wife is going to be purchased in the next day or so. I saw there was a deal on that.
She doesn't listen, huh?
No chance.
No.
No chance. She's got 2 kids to deal with. She doesn't have time, and she's certainly not listening on replay here. But other than that, she handles the kids side of things. How about you?
Well, that's what I was going to ask. What'd you get me?
My presence, the joy that I bring every time we step on the air together.
Which is always wonderful.
A joke book.
Always wonderful. No, I can't take I have a couple in-laws who do listen, so I can't reveal for at risk of
spoiling
spoiling it. So
how about the kids? I know that they're not listening yet.
Well, I'm still trying to figure out what they want at this point. They won't tell me, so it's I keep telling them, look, Santa needs to know in advance, what to be able to bring you, and unfortunately, I don't have any good answers. Last year, it was a teddy bear and a dress, so we'll see what this year ends up being.
We need to declutter our existing family room to get ahead of the gifts coming our way for all the grandparents and things like that, because it just is getting too chaotic.
Well, it's also a great time to donate to different toy organizations that are trying to provide gifts for families who can't for themselves.
Love that idea.
It's a great time of year to be making those donations to get some gifts to kids who really need them.
Yes.
Let's take a
Actually, Chuck, let's not go to break just yet.
Okay,
Had some
why?
tech stuff going on.
Oh,
I will let you know when we can break, okay? So let's just continue.
The show goes on.
So I have to keep talking.
Yes, please keep talking.
Oh, no. What are we going to do? Okay, Xi Jinping. He and President Biden are set to meet on the sidelines of the APEC summit this afternoon. I think expectations are fairly muted for this, which means that if anything meaningful does come out of it, I think you've got the potential for a positive surprise to markets. But as I've been saying for the last week or so, I'm not really sure that the things the U.S. would want in any kind of improved relations are the things that China is necessarily willing to give, with the caveat being that this is probably the weakest bargaining position that China has been in decades because of how bad their economy is, and maybe they're willing to bend on some things. The question being, do you get the follow-up enforcement and actual follow-through on anything that happens in the aftermath?
No, these meetings typically much ado about nothing. But
usually, yeah.
Yeah, we'll see if anything really comes out of the meeting between the two of them. As you pointed to, and we'll cover in another piece, China's economy has just been in a really weak position. So it does leave them in a place where you'd feel like it would be not likely that they'd want to worsen the relations with the United States. We've seen foreign investment decline significantly in China, and just ruffling any geopolitical feathers is not something you think they would want to be doing, but obviously you never know what steps that they're going to take, and we'll see what comes out of this meeting.
Let's now take that break that we wanted to take. When we come back, we will have trivia, and then we'll talk about how America can get its debt back under control.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us, so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston.
Hi folks, it's Susan and Mike from the Armstrong Advisory Group to talk with you today about our top year-end planning tips, which are featured in our brand new guide for the month of November. There's a lot of information in this guide, Mike, that we can certainly use throughout the course of the year, but some of the tips that we've included, if you don't implement them before year-end, it's too late. What are those?
Yeah, so a lot of them have to do with retirement accounts. So for instance, if you have a required minimum distribution, that's a 12/31 due date, and most of the custodians actually require you to do it earlier than that, so get on it if you have an RMD. If you're considering a Roth conversion, that also needs to be done by December 31st. You can't do it until your tax filing deadline. And 401k contributions, once again, must be in to your employer-sponsored plan before year-end. You have a little bit more flexibility if you have an IRA, but with some of those things, it's by year-end, not the tax filing deadline. There's also a big one to keep track of this time of year that a lot of people look into, and that has to do with harvesting potential losses. And given the way that markets have fluctuated this year, it very well could be that you have some capital losses in an investment portfolio, and at least looking at those and seeing how they could benefit you from a tax perspective is important. Obviously, caveat, speak with a tax professional or advisor when looking at this type of thing.
Great. Thanks, Mike. Folks, you can request your free copy of this brand new guide by calling 800-393-4001. That's 800-393-4001. You can also request your free copy of our top year-end planning tips guide by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Let's do a little bit of trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. Well, 1 month from today, Wonka, starring Timothy Chalamet as Willy Wonka, hits theaters nationwide. Chalamet is the third actor to take on the role of Willy Wonka. Yesterday's trivia answer, Johnny Depp portrayed Wonka in 2005's Charlie in the Chocolate Factory. Trivia question today, really easy one. Who played Willy Wonka in the 1971 film Willy Wonka and the Chocolate Factory? Be the 10th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, how can America get its debt back under control?
I'll tell you what, Chuck, this piece here from Bloomberg, I disagree with some of the methods that are suggested here. To me, something needs to be done either on the spending cut side of things or the revenue side of things. The alternatives that you have there, increasing taxes or cutting from some of the budget. Much easier said than done when 70% of the budget is Medicare, Social Security, and military spend. But those are the things that need to occur. And to me, they're much more of a significant priority than what's proposed in this Bloomberg piece, which indicates we could grow our way out of this problem as an economy through GDP growth.
What's realistic here and what isn't?
On their proposed methods of generating economic growth?
Yes.
To me, the pieces that are mentioned here in this piece by Bloomberg, AI is one of them that could add, according to a McKinsey estimate, 0.6% annually to GDP. To me, AI, we've talked about extensively on the show, particularly through the last spring and summer as it powered a lot of the market growth that we saw. It's such in a early adoption phase, maybe not even adoption yet, that the idea that over the next decade in which they're proposing a sustained 4.25% economic growth would bring our debt to GDP ratio down to 97% versus where it stands today. That is a significant amount of optimism, and I feel overreaching on the impact that AI could have if you're going to put it on the next decade. It could take a decade before we really even see significant impact from it, let alone adding over 0.5% to GDP. So a pushback there. Energy sector is another one where they're claiming that if they're able to loosen some of the regulations, that a transition to clean energy and some of these other components here would add some additional growth. Again, you have pushback there. I just don't feel as if that would be accretive enough to GDP. Those are really the two core components here, coupled with the spending decrease and the increase on taxes.
Anything else to add when looking at this? I think that the big thing that we have to remember on this is there's an impulse to try to get this squared away right away, but in doing so you may actually cause more problems. And what I mean by that is I firmly believe that the overall level of debt that the U.S. has right now is too high. But you can't simply address it in a day, a year, even 5 years, just because the path it's taken to get here, quite honestly, it's been kind of a 40-year path since the early 1980s. This problem was not built up overnight. It's been something that has been ongoing for a while. If you look back to 1982, federal deficit as a percentage of GDP was 34%. Wow. By 2000, it was up to 55%. By 2010, it was up to 89%. And we sit here today where the overall amount of debt, again, this is, the total ratio of debt to GDP is about 120%. You're not going to be able to fix this overnight because let's just say hypothetically that you said you got really extreme with it. You said, look, let's not spend any federal money at all and let's keep taxes where they are. Well, ultimately, you're going to end up raising almost no money because the economy goes into a tailspin the second you suck, $3 trillion out of it.
Mm-hmm.
So your tax revenue just absolutely plummets. On top of it, you still have all that outstanding debt. It's not the debt this year that's the problem specifically. Yes, that's part of it, but it's all this debt that's accumulated over multiple years. So you need to figure out how to deal with this in such a way that you can reduce that debt to GDP ratio while not blowing up the economy in the process.
Right.
That's because if you either raise taxes tremendously or if you get rid of all the federal spending,
you'll put the economy in.
You've got a real economic problem then.
Right.
I'm not saying that you shouldn't make adjustments and course correct here by doing some things to do so gradually where you say, okay, yes, this is the spending that we need to cut and these are the taxes that we're okay seeing go a little bit higher. But ultimately, it's going to require some sacrifice on both those sides. I don't think you can just grow your way out of this.
Couldn't agree with you more. It's a gradual process, but better to start some of those tweaks on the margins sooner than later. Very skeptical if we do see that, but it's action that does need to happen. At least some minor changes.
Let's take a quick break here, but when we return, a couple stories I want to touch on. Toyota did unveil their redesigned Toyota Camry that will be launching next year. So we'll talk about what that means. And then, porch theft. Are porches being stolen? No, it's the stuff on them. We'll talk about that when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Who played Willy Wonka in the 71 film Willy Wonka and the Chocolate Factory, the OG, if you will? That would be Gene Wilder, obviously. Before Wilder was cast as Wonka, the role was sought after by comedy legend Peter Sellers, and even the entire cast of Monty Python expressed interest in the part. Wilder eventually won the role after auditioning for producers at the Plaza Hotel in New York. Winner today of the Financial Exchange Show t-shirt, Tom from Spencer, Mass. And Tom's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Toyota announced yesterday that they are going to be unveiling, or rather they did unveil, their new Toyota Camry for 2025. It's a completely redesigned model. And they are going fully hybrid with this. They are not offering a gas engine only. It's going to be hybrid vehicles only, which I think is kind of doubling down on Toyota's strategy of, hey, we're not going towards just EVs because we don't think that's the market, but we do think that people really want better gas mileage, and so that is where they're heading with the Toyota Camry for next year.
That's the biggest point that I had as a takeaway, Chuck, is that they have really come out, Toyota as a company, as their stance of being doubling down on the hybrid market versus all the other peers out there, Ford, GM, et cetera, that are spending billions of dollars to develop capacity to produce EVs. That make up, I believe, 6% of the new car market in the U.S., so still a long way to go, but under the premise that in the next decade it will become the prevalent purchase. Toyota has gone the other way and has not really invested any capabilities on just EV alone. It's all hybrid. So it will be interesting to see. There are going to be some winners and losers from this bet on EV. Toyota staying away from it and focusing more on the hybrid side of things. It's worthy to note that they sold about 2.9 million of these Toyota Camrys in 2022. That was significantly off from 7.2 million a decade prior that they were selling of the Toyota Camry.
Well, that's sales of sedans overall, not the Camry.
Oh, sedans. Oh,
the Camry
sorry.
itself sold, I think, about 300,000.
Gotcha.
So it's
more speaking to consumer preferences on the SUVs versus the sedan market. Yep.
Everyone's moving that way. Look, if it were up to me, as much of a loser as I would be, I love wagons. I think wagons are great because two benefits over SUVs, in my opinion, is first, they tend to be a little bit longer, so you actually get more cargo space in them, especially behind that back row. The second piece is that because they are lower, you just don't have to build as much height in, they tend to be lighter and have less air resistance, so you get better mileage as well. And honestly, I say this to someone, look, I just leased a Subaru Outback, so it's kind of in that tweener, like it's basically like a wagon that they put up on little baby stilts. But I love wagons personally because I think they are what SUVs want to be as far as the functionality goes. But again, this is personal preference. There are other people who are like, no, I prefer the SUV because I'm up higher, and okay, that's fine. But I if it were up to me, everyone who made sedans would still make wagons, and I'd be buying them not left and right, because I don't like buying cars.
How many wagons do you need?
It's funny you should ask that, Tucker. The answer is 6.
Oh, okay.
The answer is 6. But no, I think wagons are just great personally, but I realize I'm kind of in the minority and my viewpoint's kind of there. I get that.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December, according to U.S. News and World Report. December is the start of dry season on the island, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com, learn about all 3 islands, and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Paul, you ever been a victim of porch pirates?
Yar! Once or twice.
Yar, walk the porch.
But not that often, because when I lived in the city, well, not the heart of the city.
We're scouring the Amazon for Amazon.
When I was more in the apartment living style, if I had any package that was of value, I would send it to my parents' house in suburbia rather than having it sent to my apartment because of that concern. So it was something that was top of mind, that anything valuable was going to suburban location rather than an apartment, because that is prevalent everywhere, porch theft in the city.
Yeah, when I was living back in Somerville, I had a few things that got taken off my porch that ultimately led to me basically shipping everything to the office just because it was easier.
Mm-hmm. Now, were they expensive items, or were they like just dumb, weird things that
I
like,
can't remember
was like
offhand.
$12?
I mean, this was like 10 years ago, so
Yeah.
I can't tell you what was actually taken. I really don't know, and I think in all the cases, Amazon or the original seller ended up reshipping them because I was like, hey, this never got to me. But I don't remember what it was, but it just became easier just to ship stuff to the office,
Yeah.
which then resulted in like, oh, gee, it's another package for Chuck at the office. And so that was, kind of a fun point in time for me. But again, the estimate, $74 billion in theft from porches is it's pretty significant and kind of sucks.
Imagine Amazon. This has got to be one of their largest problems on the logistic network in general. I just imagine it. And they had reached a point where they were just sort of resending, Chuck, to your point, than rather investigating any issues with the delivery. They just said, screw it, we'll just send it back out, because they didn't even want to take the time to try and figure out what happened to some of these packages. It's just something that I don't know if there is a perfect solution for it. They mentioned this piece here, tracking updates and security cams and things like that, but I don't know if those are going to fully resolve the issue. They've been talking about kiosk sort of structure where you could lock up some goods, but I just don't think that it's something you can implement in every single city to have those lock boxes and things like that.
Yeah, let's look at the security cam footage to see who stole my potato peeler.
Exactly, and then what are you going to do? They really going to make this a high crime priority to be studying your Ring doorbell footage for your diapers?
Yeah.
This is where I think you can get more creative with punishments. You get caught stealing something off someone's porch, you get handcuffed to the porch for a night.
I don't want that guy on my porch.
Okay, fine. You put him on a different porch. Whatever. I don't care.
A porch to be named later.
Yeah, a porch to be named later. Fine. But, because, look, this is not someone that, if someone is stealing, again, a potato peeler off the doorstep, it's also not someone that, you don't want to be throwing someone in jail for years because of that either. Think about all that you spend just doing that.
So I want to see the footage of him opening the package and discovering it's just like a peeler. Be like, man.
Well, this did also...
Already got a peeler.
The other thing that I know people got creative with was, putting the decoy packages out on their porches.
Yeah.
Yep.
Where it's, like confetti. You have the glitter bombs where, someone opens it and it's just glitter goes all over them. So those are the kinds of things that, I don't know, I think you can get creative with that as well, just decoy packages. But again, it's a whole bunch of effort because most of the stuff that gets taken, it's like a lot of low-value items.
Yes.
There's no correlation between package size and the value of said item.
I'm just picturing the burglar saying, "Oh, we got a big one. It's just, my pack of Huggies diapers. It's several boxes of those. Put
Hey,
into
that's
one
real
bigger
money.
box."
Hey, yeah, I mean,
that's true. But good luck with the resale.
Enjoy my pack of toothbrushes.
Right? Or you got the little ones, like, oh, there's nothing. No, it's like a $30,000 watch that someone bought.
Jewelry for someone, right?
Exactly. So it's. I don't really know how you deal with this problem in a realistic way, quite honestly.
My HDMI splitter, that was $21. Have fun.
Hey, I could use one of those. Thanks. Let's take a quick break here. When we come back, it's Stack Roulette.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. Securing your family's financial future is one of the most important elements of estate planning. Leaving assets to your children can be very beneficial. However, gifting these assets can pose major problems. If you gift your home to your kids and they suddenly decide to sell it, your gift could create massive capital gains tax problems. Cushing & Dolan are experts in elder law. Let them help with your legacy planning by calling 866-848-5699. Ask for their new guide called Making the Most of Gifting Assets. Whether you're deep into the planning process or just starting out, this guide contains the information you'll need to make the right decisions for your overall plan. Call today, 866-848-5699, and get this new guide, Making the Most of Gifting Assets. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called the Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today. Or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and we want to thank all of you who came out over the weekend for this year's DAV 5K. The event was an incredible success and a terrific tribute to our great American heroes. If you weren't able to attend but would still like to make a donation, visit dav5k.boston for all the information. That's dav5k.boston. The DAV 5K Boston was presented by Veterans Development Corporation.
Paul, what do you have for me for Stack Roulette?
Senate bill could enable the Revolution Stadium in Everett at last. There was a measure that took a big step forward on Monday that would finally enable the Kraft Group to build a 25,000-seat soccer stadium for the New England Revolution along the Mystic River in Everett. It's set to be built in a disposed shuttered power plant, and they opened up 43 acres to potential development. It would be certainly a great boost for Everett to have something in the city right across from the Encore Casino, really building up that area, Chuck. And someone who's a soccer fan, getting out to Foxborough is a bit of a pain in the neck. It would be nice to have a city option to go and catch a game. I understand they rank much lower than our major four Boston franchises on the must-see, but nice to have it more locally in the city rather than out in Foxborough.
I think if you had a soccer stadium anywhere, in that, basically from Revere down to, Dorchester, put it anywhere in that area, I think that you would see attendance and interest through the roof.
Yeah, because this would attract non-soccer fans. People would just do this
It
for
would.
a night
For an
out.
event. Yeah.
Totally. The other thing that is a huge help in terms of this is, again, look at the populations in those towns in particular. You have a ton of populations that are from countries that are huge soccer fans to begin with.
Right.
I mean, think about just the boost that you get from something like that. This is, I think, potentially huge, and I would love to be able to go to a few soccer games a year as someone who's a huge fan of the sport, but getting to Gillette for a soccer game is just a pain.
I'm not going. I'm not I have people who would give me free tickets. I know people would be like, "Hey, anytime you want to go, just shoot me a note or whatever." And I'm not going. I'm not going all the way to Gillette for that. Sorry.
It would be much more fun to structure a day where you're heading to the city, grab a bite, and then head over to the stadium within Boston rather than heading out to Foxborough. As much as they've tried to build up Patriot Place, there's just something to be said about going to the city for it.
And the thing, when's the last time either of you went to a Revolution game?
Never. I've never been.
10 years.
You've never been to one?
No. I'm telling you, I'm not going to Gillette Stadium for a soccer game. I'm sorry. I'm not.
As much as I've poo-pooed it, it's at least a more laid-back experience to visit Gillette. I've been to one or two games, and it's a fine take.
I'm sure it is. I'm not going.
Because it's not the parking lot that you're dealing with when you're dealing with the Patriots game. It's obviously a whole lesser animal.
But it's not a great environment because the whole top of the stadium's closed off.
Right. There's so many empty seats.
It's like, okay, the whole top is empty, and even below, it's still too big. If you could get something that's appropriately sized in a location that is better to get to, oh my goodness. Just look at the teams that have actually built new stadiums, even existing teams that have built new ones in recent years, and what it's done to their attendance and the viewership. It would be absolutely huge, in my opinion.
I didn't realize that Gillette is 66,000 for capacity.
Yeah.
25 would feel much more intimate for a soccer setting where you're never going to get the type of attendance that you would for a football game. But I agree with you. That would make it feel a better experience to have it sized appropriately at 25 versus 66.
Yeah, I think it would be absolutely fantastic. So I'm hopeful that something gets moving on this front, but I've been Charlie Browned a number of times on this. So It's we'll see what happens. Wall Street Journal has its list of the best and worst airports out for the year. And in terms of the best airports for 2023, according to the Wall Street Journal airport rankings, Phoenix, Sky Harbor International, you got Minneapolis, LAX, Atlanta, and Detroit rounding out the top 5 here. Kind of unusual given that, Atlanta and Detroit have historically been just a mess at various points in their existence, but grading out very strongly. Boston, Logan, grades out as the 10th best airport. It gets penalized quite a bit for reliability, not unexpected given the weather.
Sure.
But it picks up some points for value and convenience. In particular, when you look at where it ranks well, security clearance, the speed of getting through security is the second fastest out of any airport that was graded here. And the car rental rating came in 5th out of any airport. Airline market share came in 5th as well. Places where it lagged, and again, this is just looking at large airports, so you're talking, there's like 20 that hit that category. Where it graded poorly, the shopping's bad. Not many stations to fill up your water bottle. I guess that's part of it. Child facilities are bad. Bars and restaurants are expensive. The bathrooms are not great. The taxi and ride sharing is kind of a pain. On-site parking grades out poorly. Airport layout grades out poorly.
Who was the longest for check-in time? I'm trying to find that here, that were slow on security.
Let's see. Well, Newark was
20th
18th.
overall. Okay.
So Newark's bad. JFK's probably up there. No, JFK actually was rather okay. Let's see. I don't know who the slowest is.
Atlanta, massive airport, so them to be as highly rated as they are means they're quite efficient the way that they do it, because it's just huge to walk through, a huge
the problem you run into Atlanta is the same as you run into at either O'Hare or Newark, which is you land and it's like, oh, my flight's 2 miles that way. Gotta run.
Yeah, really tough for those layover spots, and that's a big destination to have a layover out of. I guess I don't fly enough anymore to really have a huge weigh-in on Boston. I go so seldom that, to me, I never really had huge problems with it. I would agree that food and drink always expensive, but I feel like that's the case for many airports out there.
Yeah. Taking a look at markets, we got the Dow up 93 points. The S&P is up 9. The NASDAQ up 26 currently. So markets off their highs, but still up about 0.25% today. 10-year U.S. Treasury is, again, selling off, giving back some of the ground it made up yesterday, up 11 basis points. That's probably contributing to a little bit of the not sell-off, but the giving back of gains in equities today. And I guess we'll just see where things end up. Tomorrow, more economic data coming out, including weekly economic claims and continuing claims. We've also got more earnings with Cisco, TJX. I'm sorry, no, that was today. Tomorrow we got Walmart and Applied Materials. Those are the two big names reporting tomorrow. We're done for the day. Back at it tomorrow on the Financial Exchange.